Yeah, absolutely. And we'll cross to Diamond Bank to speak to Olumide Akindele, Head of Proposition and Liability, and he gave us a perspective on retail banking in particular. It's great to have you on the show, Olumide. I want to first of all get your thoughts on this financial inclusion strategy that the central bank has proposed. The target is to bring down adults that are not exposed to financial services from 46% to about 20% by 2020. Can you just give us a perspective on that document that the central bank has put out there?
Good morning, Wole. Hi, nice to be back on the show. The CBN framework draft on financial inclusion or financial literacy is premised on three main things: financial empowerment, financial literacy, and as well as consumer protection. What has happened over the last few years is that the CBN has been trying to find a way of, as a part of a wider strategy, bringing people that are excluded from financial services as a whole. So what they've come up with is a draft framework, exposure framework, where it guides all stakeholders within the economy to actually try and bring in not just only the financial customers that are not within the financial services, but also look at including people that do not have access to financial services, also giving people financial empowerment, and also looking at consumer protection, all in one document.
But what does this mean for retail banking? I know that's your forte at Diamond Bank. Give us a sense of how this could impact retail banking as it is done today.
This has a huge, massive impact on retail banking, because if you think about it, retail banking are generally people that your everyday person, whether you are an illiterate, whether you are a student, whether you're a graduate, whether you're a sophisticated individual. What they're trying to do basically is to try and make consumers understand the basis of financial products, understand what they buy, understand the different options they have, understand financial planning, understand prices, understand what they charge, and more importantly, also understand value for what they get. So it will have a big impact in retail banking in terms of reading, pricing, financial statements, understanding choice, and understanding different areas for you to be able to make an informed decision.
But in terms of growth, we know, for instance, right now that retail banking is still a very small part of the pie for most banks. Their target is to bring that percentage from 46% down to 20%. By 2020. If we do achieve that, what would that mean for the size of retail banking, the retail banking space as we see it today?
Well, that obviously will have a quantum leap in terms of retail banking numbers. It will also begin to have a paradigm shift of most banks in terms of looking at core market. Traditionally we've always been a commercial or business corporate type industry, but what we probably will see in the coming years to come is a huge shift on understanding consumer behavior, consumer trends, and also consumer protection, and also a variety of products that will allow banks offer different consumer categories.
What about the rural space in particular? We know a lot of focus has been in urban areas for retail banking today. How do we see the opportunities for banks in the in rural areas? We know, of course, poverty levels are much higher in those areas, but give us a sense of the opportunities you see for banks.
The opportunities in the rural area is huge. I mean, the CBN came with the unbanked, or rather the financial inclusion policy, which looks to actually encourage consumers in the rural areas and the ones that don't have access to financial products have those accesses. Now, what will happen in the retail space is probably we'll see more and more banks go down that level and invest. Now, the key is investing wisely, because you can gone are the days when we're going to gone are the days where you'll see brick-and-mortar investments in terms of branch infrastructure. But what will probably happen is that the use of technology, the mobile technology, the agent banking, for example, will drive investment towards that area, because we as banks also have to look at the most effective ways of serving this type of people in terms of the rural areas. So I expect that over the next foreseeable future, we will see enough investment and enough area being paid to these particular areas.
Right. Final point for me, and if we can just move to the inflation numbers. Yesterday we saw it up to 12.9%, and What's the implication for the retail banking space? We know that, of course, if there's a rate decision, interest rates would go up, and to some extent it will impact on the lending rate in the retail space.
Sorry, Wole, I missed the first part of your question.
All right, I want to get your perspective on the impact of the hike in inflation and what that could mean for rates going forward, and of course, by implication, what that means for the retail space in terms of lending to consumers.
Well, as inflations go up, it means things are more expensive, and financial products are no any exemption. Now, you know, my own personal opinion is that, you know, we will see, yes, there will be more access to retail lending or retail credit as we know it, but it will still be the foreseeable features will still be probably at a high cost. The question is whether, you know, there is enough access to, you know, individuals to be able to actually lend. I personally do not see any change in terms of, you know, what the banks are doing in terms of trying to drive retail lending as a whole to that. We do need obviously some form of guidance and regulations from the CBN to try and drive that, because obviously the cost of lending will always be still high.